9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. You're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We're counting down to the open of markets in Greater China. Let's get to your top stories. This Friday, Asian stocks tracking Wall Street gains while oil is dropping on news of a tentative deal between the U.S. and Iran to extend their ceasefire by 60 days.
Upbeat tech headlines also lifting sentiment with Anthropic's valuation topping OpenAI and a new funding round and strong AI server demand boosting Dell's outlook.
Also ahead, we speak to Boston Dynamics about integrating humanoid robots into industries and the role of government regulation.
Plus, a closer look at advancements in China's biotech sector and Hong Kong's push to revive tourism. All right, so it is Happy Friday as we, of course, count down to the weekend. And certainly this source is telling us that maybe we are seeing some sort of fruition here in some sort of deal. At least that ceasefire has been extended, according to our reporting, for 60 days now. So that certainly is lifting risk assets all over.
Yeah, it really has. I think the dollar has really been on offer. We've been looking at this rally, the mirror of the softness in the dollar in the form of EMFX, which I think is up every single day, I believe, going into today. It's early days on Friday, but that's another thing we're tracking today, given, of course, this backdrop of this risk rally. And, of course, within that, of course, tech, even without certainly the backdrop, has rallied even more so with that rally that we're seeing today. What's going to be key is the context on oil, right? So we've been waiting for oil to take out $90. Just for context, if we do, we're still up 55% year to date. We're down 20% from the peak. So just put that into context, given the yield and inflation story that we've been also tracking simultaneously here.
Yeah, so I mean, it seems like we are hovering around that $90 handle more so than 100, which is a good signal here, right?
So quote unquote good thing.
Yeah, so certainly we'll see. I mean, there still seems to be some mixed messages. You have the likes of J.D. Vance, the vice president, saying that they're going back and forth on certain language points as well. So there's still kind of the devil's in the details and all things like that. But certainly, as you mentioned, right, the tech theme continues when you have all these, guests from the Humanoid Summit in Tokyo talking about really the prospects of Chinese humanoids, robots, and really the outlook there. And then, of course, we're talking about biotech this hour, too, which also continues to be a pretty hot topic here.
There's a very important oncology summit in the U.S. and
there's that deal, Pfizer and Innovent as well.
Yes, that outsourcing deal, licensing deal rather, and I think that's really a key growth area for Chinese biotech. And I think they're going to be presenting some of the data that they've been busy with and the trials. And I think AI and how they're managing to get the data is going to be interesting to see how that re-rating is taking place, because MSCI China Healthcare actually has missed out on this rally because of what we're seeing in AI. But I think we'll see whether or not we get that catalyst today. Now, just speaking of tech, right? It's a new day, but it's the same theme. We talked about Lenovo at the start of the week. Now it's their peer and Dell, and they're raising their outlook there in terms of their guidance. And, of course, you also have this re-rating on Anthropic closing, I think it's Series H. Yeah. Close to about $1 trillion in valuation there.
So, there's plenty of good news out there, it seems, at least now. And even the geopolitical temperature has been tempered down slightly. So this is what we're seeing when it comes to markets. We are seeing 1% gains in Japan and Taiwan, in Korea here today. Nasdaq futures are slightly to the downside here, but certainly there's a lot to go through. Let's get to our top story and bring in, of course, our team. Bloomberg Managing Editor Jill Desis and our markets reporter Anthony Stevens. Jill, I'll start with you. It's a tentative deal. What do we know at this point?
Yes, Yvonne, I think tentative there is really the thing to really underscore here. This deal is still pending Trump's sign-off. Axios is reporting that Trump's asked for a couple of days to think it over. Essentially, what we're looking at is a 60-day extension of the truce that's in place. Although, remember, the ceasefire that we're already seeing, there have been some isolated military strikes involved with that already. So another thing to really consider here. But when it comes to this latest sort of potential extension of this truce, you're looking at at some negotiations over maybe there's a memorandum of understanding that the Strait would be fairly open, that Iran would remove mines in the Strait of Hormuz. But again, none of this is completely locked down. We're still waiting for Trump to decide. And I do want to stress the other thing that we heard from Treasury Secretary Scott Bessent earlier, which is that any sort of a longer lasting deal would have to consider what Trump has as his three red lines, which is Iran would have to hand over enriched uranium, that the Strait of Hormuz would remain open, and that ultimately Iran would have to end its nuclear program, which of course still does seem like a very, very long way from actually reaching any kind of a deal on. I think all of that is, again, something really important to consider here.
Does it look like he's going to sign it? And you said fairly open on the Strait of Hormuz. What does that mean?
Right. Yeah. I mean, look, David, I think when it comes to what Trump's actually thinking, I'm not in the business of predicting exactly how he's going to decide on some of these things. But when it comes to the Strait of Hormuz, again, it's that idea of the waterways would be open. I do though want to stress that some of the conversation that we've seen from Trump over the last few days has been a bit confusing and unclear to kind of follow. I mean, he's certainly said that one thing that he wants the U.S. to be involved in is sort of like watching over the strait. So there's various elements here that I think are still a little bit unclear. But again, we'll have to see whether or not this ceasefire extension actually takes place.
Okay. We'll watch this and update our viewers and clients once we have more information there. Jill, thank you so much. So we're going into the opening bell here, 25 minutes away. We're looking at A50 futures coming up on your screens. This bond market rally that we've been tracking, and Amundi, in fact, cutting their bond overweights, given, of course, what that's already given them. And, of course, we're trading at about 10, 11-month lows on the 10-year yield. A50 futures are doing this. We're looking at, on top of gold and oil, copper's also been giving us something to talk about recently, and that's also been picking up. And there we go. Copper in Shanghai is up 1.2. And I wonder why we're looking at a cross rate, but that should be still relatively the same. There we go. 677.43 against the U.S. dollar is the reference rate today.
Yeah,
it's the exchange rate today.
Let's get to Anthony now, who's been watching all things markets. I mean, these flood of tech headlines, that really kind of sets up the semi-trade once again in China.
Yeah, given the tech headline setup, the only red on the screen is going to be your jacket, right? Like this setup for the market is so strong. We've had positive headlines from everything from the LLM sector all the way down to the smallest capacitor chips. It's been a relentless drumbeat of positive headlines. And now with Anthropic looking to raise almost $1 trillion, you can see where the capex money is coming from. Like the visibility on that cash flow is crystal clear. And you're seeing that reflected in markets early today, right? You see Korea doing its vanilla thing, semis are very strong, robotics are very strong. The setup into China is actually as strong. BYD is launching their own chip. This follows ByteDance's deal with Qualcomm, and then and also ByteDance is looking at developing their own in-house chips as well. So there's a lot going on in the China chip ecosystem that should support risk-taking today in Asia just generally.
That's not a K-Web play, though, is it?
Correct. K-Web lagged again last night, right? And this continues this pattern of kind of bearishness on the China consumer. Coming into our session, we have JP Morgan downgrading kind of the Maotai and Baiju names as well. Mm-hmm. So the China consumer is weirdly very similar to the US consumer. In the midst of this AI boom, consumers on both sides of the Pacific are struggling, and especially lower middle class and middle class consumers. This comes as a risk towards the back end of the year, but for now, that is very contained to the consumer discretionary and consumer staple sectors.
Last word on China macro.
Look, China macro was stable before the Iran situation is kind of heading to a resolution. It remains very stable. China has a lot of fiscal and monetary space. We had a great BN around the fact that the AI transformation is allowing China to tolerate a stronger yuan. Yeah. So they have space to cut rates into that. They have space to add fiscal stimulus as well. The problem here is all these stimulatory measures have not managed to meaningfully move the needle on consumer consumption. That requires a deeper reform of national systems around pensions and health insurance and stuff like that. So until you see those measures, this bifurcation in markets will continue, where China hardware tech does really well and the China consumer space struggles.
Yeah, I think there's a great story about how some of these funds, consumer funds, are really kind of bringing in more tech people in to kind of shift a little bit the dynamics of their fund here, just given how it's underperformed.
AI tutorials.
Yeah, a little bit of a shift there. Anthony, thank you. Anthony Stevens, our markets reporter there, joining us on the latest on all things China and tech. Coming up, we're going to stick to tech and go live at the Humanoid Robot Summit in Tokyo and speak with Boston Dynamics about a market that Morgan Stanley says could be worth $7 trillion by 2050. And we're counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is The China Show.
Right, so amidst the rally we're seeing elsewhere, it's good to underscore that point, where the approach to the open today is flat on futures. MSCI China is, I believe, set for another lackluster week, but it's really been in the bond markets. And as you can see, yields are still oriented lower there with this rally in CGBs managing to buck the overall trend of higher yields globally.
Yep, and so that certainly is one side of that haven trade that people have talked about in that bond market here as well. But it brings us to focus back to, of course, the tech theme here, because it's still the big thing that's really playing out across these markets here. The Humanoid Summit is taking place in Tokyo, and one of the companies that's been at the forefront of robotics is Boston Dynamics, which is backed by the likes of SoftBank and Hyundai. Yeah,
and as you can see, the news and developments and progress we're seeing on that side is really helping lift, on top of the AI rally, lift some of these names tied to Boston Dynamics. In fact, the excitement over the industry has been really one of the main drivers, as we were pointing out. They're behind this massive rally since the start of this year. Joining us now from the Humanoids Summit in Tokyo is Brendan Schulman, Vice President of Policy and Government Relations at Boston Dynamics. Brendan, nice to see you. Nice to see you in the region. Good morning from Hong Kong. I trust you're well with a 1 hour time difference between Hong Kong and Tokyo. My understanding is you just did a presentation. Tell us about it. What was the message?
Well, thank you very much for having me. Really appreciate it. So my message is this is a revolutionary period in robotics. We've been around over 30 years, and now AI is revolutionizing the way that we develop and deploy these robots, making them more efficient than ever before and capable of doing things that we only dreamed about. And along with that, we really are looking to have government, particularly the U.S. government, but also internationally, develop national strategies for robotics. These are the kinds of policies that would help support the adoption and the development of robotic systems across industries.
Brendan, I just noticed that you used to work for global public policy for DJI. Of course, this is one of the leading Chinese drone brands. I'm just wondering, how would you apply your experience there from drones and what we saw with Chinese drones sweeping the U.S. market to what we're seeing in humanoid robots and these Chinese players are really kind of emerging here? Do you see similarities to the progress that we've seen and really the international sort of expansion plans that they have?
I think there are certain similarities. Much like with drones, robotics is undergoing a revolution now, where we have so many companies jumping in to develop the kinds of technologies that this company, Boston Dynamics, has been leading for really over 30 years. And I think some of the lessons there are that once a technology becomes sufficiently capable and deployed, you're going to see a lot of international competition. And in particular, as we know from not just the drone industry, but from other industries, the Chinese are very good at developing hardware, iterating on that technology, creating very efficient supply chains so as to deploy those hardware products across the world very rapidly. And I think that's exciting, really, to see not just China, but really the entire world, including companies in Europe and across the United States, recognize our vision that we've had for over 30 years, which is that robots are going to transform our lives. They're going to revolutionize industries, make workplaces safer, more efficient, and really just improve the quality of life across the board. So not surprising to see the Chinese enter the field just as they did with drones.
But I think what we saw with DJI, really entering into the U.S. market was that it really showed that the U.S. was in some way dependent on Chinese goods in some ways, right? I think that the Ukraine war certainly exposed that. COVID exposed that as well. I think the dynamics have really shifted now when you take a look at the tensions between the U.S. and China when it comes to advanced manufacturing and technology. Brendan, I'm just wondering, what would be the appropriate U.S. response then to the amount of innovation that's coming through from China when it comes to, they're putting a lot of support into humanoid robots, whether it's in funds, whether it's in subsidies and the like. What's the appropriate U.S. response now?
This is exactly why we have been advocating in Washington for a national robotics strategy for about 3 years now. Really important for the U.S. government to study the industry, figure out a package of policies that would help support our success and growth. And I think that could really run the range from workforce training and education, tax incentives for adoption and deployment. One of the things to really appreciate in this era of AI robotics is that having the deployments really makes a difference to the development cycle. Because if those robots are out there doing actual workplace in real environments, you're generating the kind of data that you then take back and make the robots better with. And so that flywheel effect is something that certainly the Chinese have recognized, that the more deployments you have, the better your robots are going to be. So we'd love to see tax incentives for robot manufacture and adoption in the United States. Smart international trade policies. I know there's been discussion and an ongoing Section 232 investigation at the Department of Commerce with respect to potential tariffs on robotics. I think if we approach that in a smart way, that could be of assistance too. And then, of course, as we saw in the drone industry and in other sectors, cybersecurity and national security at the focus of policy should look at, examine the risks, and also make sure that we have that in order as well.
Brendan, talk to us about the supply chain. And I'll use the example that Jensen Huang of Nvidia, who spends a lot of time talking upstream to his suppliers to put that capex in so he can then put that his production to work. Talk to us about the opportunities and the gaps in the supply chain for humanoid robots, for example. And where do you think the opportunities are, for example?
I think the supply chain resembles that of other hardware technologies. You have many of the same dynamics with respect to, let's say, batteries, actuators, and motors. There's a significant crossover between electric vehicles and robots to some extent, which is why it's great that we have Hyundai as our majority owner and partner. And I think that really is reflective of many of the supply chain challenges that the Department of Commerce has been talking to us and other robotics companies about.
Brendan, we've been talking a lot about the haves and have-nots of AI, and I think you extend this to the humanoid robot sort of space as well. Just given the concerns around the displacement of labor as we continue to adopt AI into companies, into industries. What role do you think government should play in really protecting human labor in all this as well?
This really is a key part of the national strategy that we hope to see is workforce education and training. I think it's fair to say that technology has been changing the nature of work for a long time, and to some extent humanoid robots are no different. But what I think is different is the emotional reaction. You are looking at a machine that is the size and shape of a person. And so people are going to feel an emotional response to that particular technology. Even if the smartphone has displaced or changed the nature of more jobs than robots ever could, you're not looking at your phone and thinking that has taken your job. But I do think there's repeated concerns that we're hearing across different stakeholder groups about the humanoid robots, and that's a particular reason why the national strategy that we're hoping to see developed in the United States really should focus on making sure the workforce of the future is trained to use these technologies. And of course, it's really, in some sense, almost inevitability. If you look at the demographics of this country and especially here in Japan, we just aren't going to have the workers that we need in the future, just given the birth rates. And so inevitably, we're going to have automation and technology making jobs safer and more efficient. And what's great about robots is they do the physically hard and in some cases dangerous types of tasks that you really don't want humans to do because they're going to get injured. So those are the kinds of jobs that we would love to improve. And using the robots, not only do we make that job safer, but we keep the factories efficient. And if you want the factory to remain open and compete internationally, you really are going to need the robots there doing their job.
And Brendan, the difference between sort of industrial robots that we use and see and we've seen for years in factories and humanoid robots, and I don't know if is the line between those two categories becoming murkier in your view, and what do you think the moment will be for humanoid robots in the sense that just in terms of scale, we haven't really seen the volumes on the latter compared to where we have seen in the former?
I think the differentiator is just how versatile the humanoid robot is going to be. When we were thinking about turning Atlas from a research platform that we've had for 12 years into a commercial product, there was some skepticism, whether the humanoid form factor was really necessary in a factory or other industrial environment. And I think what we realized is a couple things. First of all, that kind of robot can do a certain job on one day and then a different job on another day. So if you have workers calling out sick, you can have the same machine that you've invested in once doing multiple jobs throughout the course of its life cycle. And that's a huge advantage in terms of the capital investment in that technology compared to, say, installing 10 or 20 different robots in the factory. The other advantage to the humanoid form factor is humans can train that robot to do its behavioral application in the workforce, because using AI, people are wearing sort of VR capture suits. They're using hand controllers and sort of VR goggles to look through the eyes of the robot, do that task, and thereby generate the data that the robot needs to understand and learn how to do that behavior. So that's why the humanoid form factor makes sense. If you tried to do that for an industrial arm or an AMR or something else that doesn't have the form factor, you're not going to be able to translate one-to-one between a human trainer and the robotic technology.
Brendan, we got to leave it there. Thank you. Brendan Schulman there, Vice President of Boston Dynamics. We do have some breaking news when it comes to, of course, that SpaceX IPO. So what we're hearing, according to our sources, that they are thinking about lowering that IPO valuation target to at least, at this moment, $1.8 trillion. I think early reporting from our team was saying could be as much as $2 trillion, so just a little bit of a trimming of that as well. We'll have plenty more details coming up. We'll flesh that out, that story coming up. This is Bloomberg.
Okay, that Dell story overnight is drenching the hearts of Lenovo bulls in wine. Further 15% gain today in the early goings.
Happy Friday. Get a cheers for that. And Innovent shares are also rising here. Of course, they just inked this big deal with Pfizer here, $10.5 billion deal for a global agreement to develop cancer drugs. The stock is up close to 7%. We'll have more, of course, on the healthcare sector coming up as well. The Open is next.
Good morning and welcome back. You're watching the China Show. The Friday session is ahead. I'm checking the temperature now. It's...
Oof.
Right?
I don't need to see it. It's hot.
You can feel it, right?
Oh, it's just hard to be outside. It's a sauna out there.
Well, I mean, in case you missed out on tickets to Burning Man, all you have to do is step outside. It's unbearable. And
it's happening around the world, I feel as well.
Well, at least we have AC here. Like, there's a story in London not having AC again.
Oh, can't even imagine. So certainly the fans and really the ACs will be cranking up this week, and it's going to be a scorcher. I think I heard it was 34 possibly on Friday in Hong Kong, 34 degrees. So certainly that's going to be a big one here. And hopefully everyone hits the pool. But here you go.
Yep.
These markets are still hot, though, I got to say, when it comes to this whole AI trade. CSI 300, we are seeing onshore markets doing okay here. Of course, there was some of these good geopolitical headlines around possibly U.S. and Iran have reached some tentative deal. That ceasefire also could be extended by 60 days. That's helping to lift the risk mood music here this morning. And then you have news about Dell's outlook. You have Anthropic fundraising. Now you have the SpaceX IPO scoop about how they're trimming that valuation ahead of that IPO. I mean, there's a lot of good news out there here to kind of sink your teeth into, right? So we're watching very closely Shanghai. We're seeing about a third of 1%, but we're still on set for a third week of losses here when it comes to Chinese stocks here. But, you know, the chip sector, as we've been saying, really has stood out. And you are seeing the likes of Capricorn Tech still up just slightly here today. Rated new buy at Murray, though, today. So that price target at 2020 renminbi. For the boards here, of course, we've been tracking Hong Kong. And really, we continue to see where the dispersion lies, right? Within the hardware, software space, within the tech and the consumption space as well. Because we continue to see some of these consumption names not do too well here in the face of it. And really, the likes of JD.com and some of these e-commerce platforms, just given the earnings that we got this week, is continuing to show how weak the consumption story is. JD.com also facing that EU probe as well, so the stock is a little bit to the downside here today. The renminbi is strong, though, 677. We were talking about how this whole AI boom and exports and the like is actually allowing policymakers to tolerate that stronger renminbi. So 677 for the currency here as well. And we're watching really closely what happens when it comes to, of course, the EV side of things. So XPeng came out with earnings here. It looks like that loss was bigger than expected here, given the amount of money that they're putting into, of course, new technologies. They're heading into humanoid robots and the like. You know, when it came to domestic deliveries as well, in terms of EVs, that also was not too pretty as well. So 2% losses for XPeng. Li Auto also came out with earnings as well. The stock is down some 3%. So that revenue guidance did miss estimates and is weighing on the stock here today. BYD, though, could be a different story, right? They're coming out with this new EV chip to help with them when it comes to, of course, their global ambitions. So that certainly is one thing to watch out for. The most advanced EV chip in China, they say.
Yeah, and I think more and more of them are really folding the tech underneath, their own value chain, and really, I mean, just speaking of that, right? So AI has been folded into the biotech space. We'll talk more about that with Jefferies later on. But Innovent Bio is continuing to give us more stuff to talk about here. This out licensing deal, I believe it's an out-licensing deal. It's a $10.5 billion, could be as much as that. Collab with Pfizer, and shares are up, as you can see, about 9% there. And on the server stocks, server names rally we've seen this week, and we've seen this really in various iterations across markets, mostly in Taiwan, partly in Japan, in some version here in Hong Kong, and yet Lenovo, there we go again, 27%. So we were 44% up over 3 days to Thursday. Yeah, just vertical, ridiculous rally there. And the catalyst was the Dell outlook.
Yes.
But the catalyst for Dell was the Lenovo outlook.
It's a self-fulfilling thing now. It's a bit of a loop here on how they're just feeding each other on when it comes to the possibility of AI server sales. And really, it completely is to kind of put all those concerns around, slow PC sales and the like to the wayside right now. Re-rating,
it's not a zero-sum game between these two. Right, just to recap to this re-rating that's taking place, not just in the public markets, but soon to be in the public markets because of the SpaceX scoop. That we understand that the valuation target has been lowered to at least 1.8 trillion for this massive IPO that is upon us.
Yeah.
And that's been lowered from above 2 trillion, but even at 1.8 will be enough to put SpaceX within 1, 2, 3, 4, 5, within the top 10 largest companies in the world. And we talked about Anthropic, right?
Yeah.
And Series H, which is just barely under $1 trillion in terms of
it's still,
valuation.
SpaceX still, I think, set to be one of the biggest IPOs ever, right? So that continues to be one big story here. But it seems like they were talking to some stakeholders, they were talking to some advisors, and they say, look, maybe we need to kind of trim it a little bit here, just given how eye-popping that valuation has been as well. Joining us now is Ivy Ng, Apex CIO at DWS. Tell us what to do with these markets. It's still this momentum that we need to continue to chase, it seems like. And when you talk about what these big companies are doing in terms of capex, all these fears about some sort of capex correction, we're not seeing that at all at this point. Do you just continue to chase the same trade?
I would say the same trade is still working. As you say, the whole market is focusing on momentum. But what we are trying to do is a little bit more diversified. So of course, the leading name in Korea continue to have the earning support. I remember in January when we were here, we were talking about everything has to be back to earning. Then if you take a step back, look at the whole Asia Pac market, how much the market actually gone up, look at the kind of earning revision. It's pretty much in the same momentum. Yeah. So I think the earning part is still the key driver. So in this case, the capex is very important. To some extent, if you see the hyperscale cutting the capex, that will have some correction. But the good thing is, or what gives us comfort is, when you look at some of the company right now, particularly with the memory one, they actually have a long-term contract in it. It's something new, compared with the previous cycle, and that's also what gives people comfort. It may not be that cynical. It's also have some structural kind of 3 to 5 year contract in it. So that part, I would say, we still like those stock. We're still positive on it, for the South Korea market. But in the meantime, you're right. Market is one-way direction. It's is it very concentrated? So then you have to take a step back for the whole AI supply chain. How should people look at it? If a stage one is compute, memory, and then we have seen the market from GPU to CPU now, what next? What should people focusing on? And on top of South Korean market, Japan has doing pretty well. Taiwan, as you mentioned, even for China, China tech names also doing pretty well. So that is the area we just keep searching, where we get the benefit, where will be the growth. Because to be honest, the world also have other problems going on. As you mentioned, there's geopolitical tension, inflation picking up. So one part of our portfolio or our decision making is always focused on which company can actually deliver the earning growth.
Is that a good way to determine which stocks to buy, where the earnings are most visible? Because the Korea example, I think, is the most perfect example, because you can see earnings 5 years down. The China play arguably has longer runway, but I can't see the earnings there. How would you approach that latter?
I think the market has told you the answer of it, right? So market definitely give more reward to the South Korea market, because that is where they're all earning kind of lock in and they have the visibility. But in the meantime, you also see that when you look at China overall, because it have a lot of sector, consumption sector, a consumer sector not doing that well. That's part of it, the reason you see overall index is not really moving that much. But when you look at the particular tech-related stock or the industrial-related stock, even the auto component maker, right, they do get some potential revenue coming up, with the humanoid robotic trend coming up in China. So I would say for China, you have to be more selective to look at which part of the business is actually really will get the earning growth going forward, and the current valuation is still reasonable. But for Korea, just given about the two stock kind of dominate the market. So for people that's very visible, that's kind of dominate the market, similar as what we are talking about in Taiwan.
Okay, if I want to chase momentum, it's the equity market. If I want to price in inflation risks, do I continue to look at this bond market? And is short duration still the strategy moving forward?
I would say inflation, maybe tell you our stand about inflation first. We do think that in the short term, inflation will pick up, but this is more temporary instead of structural hyperinflation coming back to the market. We don't think that's the case. The key reason is when you look at the oil price in the future, it's basically telling you that it's more short-term price increase. And our house view for the next 12 months, we actually think that oil price will get back to $82 dollar level. So with that and with the bond market kind of already pricing in about the inflation risk and also the rate hike, particularly for ECB that we are seeing in the market, or market was also thinking about that potentially no more rate cut in US, right? So all these things is pretty much pricing. We do think that when you look at all in yield perspective, look at from a carry perspective, some of the sovereign is actually look quite attractive, the short term one look interesting, and if you look at the IG, is also quite interesting to look at it.
So time to buy bonds and go overweight? Is that what you're saying?
We still we say equity better, because equity is the one you can actually get the earning growth.
Is that the hedge to inflation? Is that the best hedge to inflation? Equities?
Depend on which sector you're talking about.
Well, okay, AI, for example, is that
I would
the
say
cleanest way to play inflation?
Yeah, I would say it would be a good way to play inflation, but also the market momentum, and that's also what is the future of for overall economy.
Ivy, we'll leave it there. Thank you, Ivy Ng, there, CIO for APAC at DWS. And coming up, we're talking biotech here. Akeso is about to present the first China-generated data ever delivered to a U.S. oncology conference. We're going to talk to Jefferies here and why Cui Cui thinks this could mark a new chapter for the industry. This is Bloomberg.
China has superior infrastructure in terms of having high quality CRO organizations and CDMOs, contract development organizations. So these are all coming to one to address the cost and speed.
Our topic, innovant biologics, a maturing biopharma that's transitioning to a global level biopharma, and also Hengrui, which is a very successful example of a traditional, more generic-heavy company that's able to phase out their legacy products and replenish with lots of innovative drugs. So those are examples that are, on the one hand, delivering good growth domestically in their business, and also having a healthy pipeline.
Just some views recently on some guests, of course, have talked about this moment in the sun for Chinese biotech, whether that's individual names, the industry, or just this massive infrastructure build that's been taking place. And really just in terms of just the freshest of news on this story, another out-licensing deal, $10.5 billion, Innovent and Pfizer signing that one there. And the stock is reacting quite positively, 6.7% to the upside. Just a reminder, I guess, of the rally that's taking place. We draw it from early last year. World-beating rally into about Q4. It's petered out and somewhat consolidated, of course, for the better part of the last 6 months or so. It has given up some of those gains, though, but we are moving into this fairly potentially consequential conference where we could have announcements and data coming through here, this annual ASCO oncology conference taking place in Chicago.
Yeah, Akeso will be the first Chinese drug firm to present data at the event's main plenary session. And we spoke to their CFO, Wang, earlier this year.
We will continue to invest in our R&D. We have one of the most, I would say, efficient and actually highly productive R&D programs. So we're actually investing into our R&D like a biotech based in California or Boston. So we're going to continue to innovate. We have been very productive. So we're not giving any guidance on breaking even. So our P&L, right, our revenue and operating income is primarily from China. But our R&D value is global in nature.
Let's get the views now on the wider sector with Cui Cui, head of Asia Healthcare Research at Jefferies. So the fact that Akeso takes the stage, tell us a little bit more about the significance of that, really, and is this sort of a make or break moment for Chinese biotech?
So absolutely. So thank you, Yvonne. Thank you, David. So you see, it's for the very first time I'm bringing my luggage here to the studio because right after I'm heading for Chicago, taking the noon flight. Because for the very first time to witness the history that Akeso making this first ever China data to be presented as ASCO plenary session. To those of them who are not familiar with ASCO, that is the most popular industry event for clinical oncology, where the top doctors, multinational companies, as well as the investors will all be there discussing the latest breakthrough for oncology treatment. And
no, go ahead.
Yeah, and also, you mentioned Innovent before, right? So earlier today, we also saw another breakthrough deals. So Innovent made this kind of platform deal with Pfizer. So talking about we have getting more endorsement from multinational companies to the Chinese data quality. Yeah.
I mean, you put all the data so far that we have on their trials, where they are under specific phases, the indicators that they're chasing. So help us understand, Akeso is just one of few presenting, I believe, over the next, let's say this conference, over the next few months or so. What are we expecting them to say?
So first of all, we are talking about the data because about the industry, like academic data, we're talking about data. So how superior this kind of drug will be to the current standard of care. Okay. Because why Akeso is the most important one? Because for the many years, so we got a lot of like the criticism and also speculation regarding China data. Why? Because previously a lot of the data was a pure like comparison with like chemo or maybe placebo. But for the very first time, Akeso is the first and only one bold enough to do a head-to-head comparison with Keytruda. Keytruda is the bestseller in human history. So that's the idea why, like even if this is a China-only data, still like global physicians, global investors, they care a lot about this data.
What's this drug again, just to remind me?
Ivonescimab.
Okay.
As Bing, I'm pretty sure Bing has mentioned this before.
Yeah.
What do you make of some of the pressure that we're hearing from the U.S. about possibly needing to ban or restrict some of these Chinese licensing deals? I think there was a U.S. lawmaker or senator a few weeks ago that said, the flow of American capital through these deals is dangerous because you're really, really feeding the rapid ascent of the value or the supply chain of the pharmaceutical value chain. How should we look at the regulatory environment now?
So actually starting from 2022, we have like this kind of constant noises from Sino-US tension, starting from like WuXi Biologics would put on the entity list from US government, followed by the Biosecure Act. And also earlier this year, we have this kind of potential ban for either China data or this kind of capital inflow. So here's the thing. So first of all, as a Chinese analyst, I feel confident. I feel a pride like this because it is more like a national pride, while like it's attract attention from the global, especially the regulators. And secondly, we're talking about we think the actual like punishment or what kind of restriction is actually less likely. It is, so think about it. Why this kind of multinational companies, they're very eager to do deals with China? It is because, so first of all, they're facing the patent expiry in 2 to 3 years' time because we're talking about a lot of like multi-billion-dollar the blockbusters, they will face patent expiry. So they need an urgent fix to their pipeline replenishment. So China is like this kind of quick fix. They can offer cost and efficiency. So we have this kind of data. If you are doing deals with China, you can save your cost by 40 to 60%. And in the meantime, it's 30 to 50% faster. So that's the reason why. I think that is more like a secret weapon from Chinese companies.
And, well, the revenue side of that is in the form of the out-licensing deal itself. And I believe last year, 50% of deals globally were Chinese out-licensing deals.
Indeed.
Do you think that proportion goes up this year? It's in light, I guess, of today's news on Pfizer and Innovent Bio and $10.5 billion. This is the latest one of it.
Indeed, I'll give you some numbers. So year to date, the number is 69% as total deal size from Chinese companies. And also talking about the total deal size number, last year is $130 billion as total deal size number. And for first quarter this year alone, we already have $60 billion. So it's like I'm pretty sure that the trend will continue, and also to bring us more like excitement to the industry.
How do you look at AI being integrated into the industry? Does it change what it means for price discovery or drug discovery when it comes to the speed and the costs that could be lowered from AI?
Yeah, talking about AI, because we just finished our like Grand China Healthcare Tour with over 50 international investors. So just as Yvonne said, AI is actually the most interesting part to them. So for me, like most of the AI companies, now they are also using biotech models because you see they're also doing this kind of out-licensing deals to multinational companies because they are providing the multinational company more like another option to their drug discovery. And also, if you look at multinational companies such as like Lilly, Pfizer, I think they're embracing AI because this is definitely the future and hope for the industry. So never kill people's future and hope. I'm always saying that. And for AI, the idea is, so first of all, I'm going to improve the drug R&D efficiency as well as accuracy. But I think maybe we're talking about breakthrough, right? I think maybe that takes another 3 to 5 years to validate.
In terms of cost, does it bring down all costs, or can it only bring down a portion of drug development costs?
So at this stage, we are only talking about the early stage because unfortunately, at this time, there's nothing we can do from the clinical side. But I'm pretty sure this is just a matter of time. So I'm saying that maybe we can see some kind of breakthrough in 3 to 5 years' time.
Okay, Cui Cui. Thank you. Safe travels to Chicago.
Thank you. New York, Canada, San Francisco.
Have fun.
Yeah, there we go.
Thank you. Head of Asia Healthcare Research at Jefferies there, really on all the news that's been going on when it comes to the biotech space. Still ahead, we're going to preview the Shangri-La Dialogue with a member of Beijing's delegation to the annual Defense Summit. And as Hong Kong hosts its first Comic-Con, the city's tourism secretary, Rosanna Law, joins us to discuss the push to attract more visitors to the city. This is Bloomberg. All right, now check the markets here. When you look at the likes of Lenovo, I mean, this continues to be a parabolic sort of stock here right now. You're up another 20% here on the back of that Dell outlook as well overnight. Interesting enough, when you talk about the liquor makers, JP Morgan actually downgrading some of these Chinese liquor names like Maotai, Wuliangye, when it comes to the earnings growth outlook. So when it comes to Kuiqiao, they've cut it to neutral from overweight. They talked about the lack of guidance there when it comes to 2026 full year, and it does raise concerns over growth visibility and also management confidence, they say.
Okay, where we do have a lot more visibility, or at least a lot more confidence, it goes into not proportionate visibility, but perhaps enough, is in these pure play AI plays when we're looking at Zhipu, for example. And I think this one getting a series of upgrades coming from the street. One is out of Sealand, CCB International rating this one outperformed. The price target at 2,000. We're at 1,800, give or take. So that's a further, what are we just saying, about further 11% upside. This is stock, of course, that's also been bid up substantially. A look at benchmarks right now, which aren't really doing a lot, which I guess is really the story of this year, where you have a lot of these favorite AI plays, but not really enough to move the respective benchmark. It's not been a beta play, it's been an alpha play so far. Lots more ahead here on second hour. The China show is just ahead.
Welcome back to the China Show. Here's a look at the HSI half hour into the session. It is sunny skies. It is a scorcher out there here today. So hopefully you can cool down here. But these markets are certainly not really cooling down here today. You take a look at the tech headlines that we've gotten when it comes to Anthropic and their fundraising there. There's more information on the SpaceX IPO. You got Dell and that outlook that's really fueling the likes of Lenovo and these computing stocks. And there's really no shortage of good news here today. You add that to the Iran war developments here, some sort of tentative deal to extend that ceasefire for another 2 months or so, Dave. That really is helping to lift most of the region here today, Dave. So, yeah, you focus on Hang Seng. We're only up about 0.5%, but the rest of the region is doing better once again. So China is a little bit falling behind here, given what you're seeing with Taiwan. We're up close to 2% or 2.5% gains there. The Kospi is once again on fire. Topics as well as the Nikkei are punching higher here today here as well. So certainly it continues to be that North Asia sort of preference where investors are tilting towards here, Dave, and you've been tracking a lot of things, right, beyond just the technicals, but really where positioning is at right now.
Yeah, the love is spreading, right? The notion that this rally is broadening beyond your usual names, and I think a very good example of that is when you look at a market like Taiwan, and we know, of course, it is dominated by one single stock, which is TSMC. That's the ticker 2330. When you look at the Taiwanese market and how it's made up, right? So semiconductors, that's this big square right here. That's the biggest part of the market. The next is tech and hardware. And then you have financials, right? And the point we want to make here is you're now seeing more bits of green populate more sectors within specifically tech, hardware, and equipment. So this PC rally, this server rally is showing up in the market beyond a market that is just known for one or two single stocks, right? So TSMC is obviously going to rip higher. 3% higher, that's where the index goes. But we're getting a lot more support in varied points within this sector group of hardware and tech hardware and equipment, which is really helping broaden this rally and make it more sustainable if you think about it that way. Yvonne.
Yeah, things are broadening out. It's not just a very concentrated market here.
Absolutely.
That continues to show when it comes to Taiwan, Korea, as well as you highlighted in some ways as well. And, you're starting to see not just when it comes to hyperscalers. The AI trade has gone from hyperscalers to the hardware to the software. Then now you're talking about, of course, the computing side of things, right? And AI servers is certainly the dominant sort of theme here today after those Dell results, right? So we saw Dell shares soar as they raised their guidance. They talk about the strong demand for its AI powering servers as well. So that's enough to really put a fire under Lenovo shares here. Once again, recession highs were up 20%. And also we're tracking, this tech rally, not just going through just, hardware, software, but really the robotics side of things, right? The physical AI, right? And LG Electronics continues to lead the charge here today. We're up another 20% in Seoul. For more on what's really moving these markets, we're joined by, of course, our team. Let's bring in our MLive macro strategist, David Savage, as well. What are you watching here today? It continues to be the same story.
Yeah.
But yes, it seems like things are broadening out too.
Yeah, a little bit, right? And I think part of that is the pullback in oil prices as well. And I think markets are also waiting in Asia too, right? If we continue to see AI CapEx spending continue to accelerate higher, and we may see this growth and some of the earnings growth sort of spread out beyond just the names that we're all familiar with. I do think, yesterday we saw a pretty significant intraday pullback. I think that shows two things. One, there's a real appetite, particularly among retail investors, to buy any dip. That pullback lasted, I think, an hour maybe, and pretty quickly was moderated. But I think it also shows that eventually markets exhibit exhaustion, and so that doesn't mean the fundamental drivers change. This is still trending, higher. There's still a lot of reasons to like where this rally is. But eventually, investors take profits. Eventually, they run up against single stock constraints. We see that even with passive managers and the MSCI rebalance today. So that can, start to slow the rally.
That's a unique kink to consider today, this rebalance.
The month end, yeah.
How does that influence things?
It was certainly interesting here in Asia, South Korea. So a lot of the ETFs that track the South Korean market, they'll have indexes that have single stock constraints to it. So that at rebalance, if we have a stock like Samsung or SK Hynix, which is up 1,000,000% or whatever it is, they end up getting put under selling pressure. And so certainly that is something to watch, and you'll see. But, that market on close order, at the end of the day, people have known about that for weeks. But you might start to see some selling pressure ahead of that. But there's clearly such, demand, particularly among retail. We see that in the numbers in terms of how much domestic retail is filling the void in South Korea to continue to bid up these shares.
Talk us through what that you're seeing when it comes to gold and precious metals. I think, we saw sort of the correlations break down during this war. Seems like things are better, but then you have the whole rate hike expectations now. That's really kind of making things a bit choppy too.
The price action on gold and precious metals has been pretty awful, actually. I mean, it hasn't helped equity investors on any sort of pullbacks. We've seen yields come back down, and it really hasn't provided much relief for precious metals. And so I think precious metals are kind of stuck under two forces. One, the dollar is stronger, and so the inverse correlations there has been pretty strong. And so that's keeping a lid on things. And also, I think, a lot of the rally had fundamental drivers a year ago for gold, but also flows were a huge dynamic. And I think there, especially if you look at retail and some of the soft ETF flow numbers on precious metals and gold, a lot of that has cooled, and so retail has attention elsewhere.
Yeah, it's. I think we know what they've been funding, selling their gold. David, fantastic. David Savage there, our MLive macro strategist. One big group of stocks actually that hasn't quite joined in this rally is the usual Chinese tech and platform names. I think when you look at the recent earnings we've seen, some have missed estimates, disappointed on guidance. Second straight quarter, there's AI reality check, as we call it, this AI investment spend, this weak recovery on the business side, e-commerce and advertising weighing on profits. Let's bring in Jeannie Yu, our senior Asia stocks reporter, here with more on today's Taking Stock piece, this expo, this AI reality that's now laid bare because of these earnings. What did you find?
Yeah, when we talk to investors, I think the major takeaway from this earnings season, although Meituan hasn't reported, I think the major takeaway is people kind of getting more careful with return from those massive AI investments because of all the profitability concerns and also a lack of very concrete plan to monetize those massive investments. That's one thing. And the second thing is like to fund those AI investments, you need a very good cash cow, from the traditional business, and that's what's the problematic area as well. Because given the very big macro in China, especially the weak consumption sentiment, I think the lots of companies that have actually reported worse than expected earnings from their traditional business. So I think that's also another thing concerning investors, because where you can get all those cash from to fund your AI ambitions. I think that's like a double whammy for the tech companies in listing in Hong Kong, and that could be like a very big pressure for the Hang Seng Tech Index, given that those indexes are actually dominated by those internet platforms instead of those hardware companies.
Yeah, the legacy businesses that continue to be strained. Does this just give more impetus for upstream AI players in China to continue to benefit?
Yeah, exactly. So when we talk to people and they do mention, like, actually, although all the money has been chasing hardware for a while, today we've seen 30% of gains in Lenovo, things like that. But still, they're mentioning, like, given the AI upcycle, given all the investment focus on the upstream, actually the rally there could continue. So it's not really the time to buy on dips, for those internet names yet.
All right, Jeannie, thank you. Our senior Asia stocks reporter, Jeannie Yu, there on why you are continuing to see that K-shaped, I guess you could say, markets here as well when it comes to consumption, when it comes to China tech versus, of course, these upstream AI players. Still ahead, we're talking oil markets here. We talk about Brent set for its biggest monthly drop since 2020 on optimism over an extended truce between the U.S. and Iran. We got the market outlook coming up next. This is Bloomberg. Well, the U.S. and Iran have reached a tentative deal to extend a ceasefire by 60 days and begin further nuclear talks with Tehran. A source tells us that President Trump is, though, yet to agree to the terms. Now, Vice President J.D. Vance says the two sides are going back and forth on some language points, and Tehran appears to be negotiating in good faith. Axios is reporting that the deal includes unrestricted shipping through the Strait of Hormuz.
Yeah, and the question is, can and will oil prices return to pre-war levels? We're certainly headed in that direction, but we remain extremely far from those levels. It's worth pointing out at 93 still on the most active on Brent. You look at the energy space, as far as the equity market iteration of that is concerned, we're flat there. Brent, as you can see, is worst month since 2020, so we're down about 20% from the peak. We're still up 60%, though, from the start of the year. Let's bring in our oil trading reporter, Wang with us right now. What prices, what assumptions should we have on prices over the next few weeks?
Right, so let's just talk about what we are seeing in markets today. So oil is actually on track for its largest monthly drop since the pandemic. That's about in 2020. And of course, the market is reacting on optimism over this recent peace deal. Although I do have to point out that in the past weeks or so, there have been a lot of confusing messaging coming out from both sides, both from the Iranian side as well as from the White House in the US. So markets, it has been up and down in the past couple of days, and which is why today we are seeing less than, I would say, just a slight cooling in terms of oil prices as the market waits to see what kind of details could arise from this peace deal. Of course, I do have to point out that even if both sides come to an actual deal, it's going to take a while before the Strait of Hormuz resumes proper traffic. There have been a lot of estimates and sharings by industry experts that it's going to be a whole logistical challenge just to work out what will be the new normal for the straits. And congestion, or I should say a hot or more subdued traffic in the Strait of Hormuz was ultimately what led to oil prices spiking because of the prominence and the importance of this waterway being a gateway for about a fifth of the world's energy supplies. So the market will wait with bated breath to see what kind of details would arise from this peace deal, how traffic through the Strait of Hormuz would actually be enforced, whether there's going to be toll fees paid to the Iranians, how would the US be stepping in to make sure that the traffic resumes, and all that will weigh on oil prices.
Okay. Rong Wei, thank you so much. Rong Wei Neo, there, our oil trading reporter in Singapore for us, where certainly the Iran war is, while it's been fading in relevance, still remains very certainly a big topic of conversation, particularly at this year's annual Shangri-La Dialogue taking place in Singapore, where you have defense leaders, of course, gathering there. And for a second year in a row, it's worth pointing out here, China's top military diplomat will be skipping the event. So let's bring in someone who is actually attending the event from the Chinese side. Wang Dong is a professor at the Peking University School of International Studies. He's also the executive director of the university's Institute for Global Cooperation and Understanding. Wang Dong, good morning from Hong Kong. Thank you, by the way, for coming into our studios there in Singapore. It's very nice to see you. How should we be interpreting
Thank you.
China's top military diplomat not participating this year?
Well, let me first start by saying that I think the Shangri-La Dialogue, remain a key platform for defense exchanges across Asia, and China take part in that in a very pragmatic manner.
Sure.
But from China's perspective, I think the forums has also largely been shaped by Western perspectives, and views from China and the global South do not always get equal attention. And that is precisely, I think, why China's attitude is more prudent than overly enthusiastic. So we attend primarily to maintain open communication, to manage potential risks, and also to share our perspectives on regional security.
What will you be looking out for being there on the ground?
Well, I think that there are a couple of highlights. Certainly, first of all, I think China-US relations will stand out as top highlights this year. During President Trump's recent visit to China, both sides agreed to build a constructive China-US relationship of strategic stability. So against this backdrop, we can expect the U.S. delegation this year will take a far less confrontational and indeed more cooperative tone as compared with last year. And we can also expect that China will take this opportunity to elaborate its vision with the audience for the regional security as well. And there's also, of course, yes.
Go ahead.
I think yes. I think there's another very important issue. Of course, I think as the whole international community is closely watching the situation unfolding in the Middle East. And I think certainly the Middle East will be high on the agenda as well. And I think the regional countries are watching very closely how the international together can address the shared challenges. And I think that all participants will look to push for political solution and ease regional tension as well.
Wang Dong, since you brought up the Middle East, and you've probably seen the news that it looks like we are headed towards an extension of the ceasefire, and everyone in the world economy is looking at what happens with the Strait of Hormuz and whether or not it goes back to the settings before the war started. In what way do you think China can play a role in forwarding the situation there?
Yes, when it comes to Middle East affairs, I think China holds a neutral and a constructive stance. We firmly stand for a nuclear-free Middle East. We support for the freedom of navigation for international waterways. And also we call for ceasefire, dialogue, and political settlement to resolve disputes. And as you probably know very well, as it has been widely also reported by American media as well, such as the New York Times and others, China has also been playing a very instrumental role in facilitating the negotiation currently ongoing between the United States and Iran. So together, I think China very much would hope to work together with the international community to push for a political solution to the disputes as soon as possible.
What about other issues? I mean, obviously, when it comes to maritime disputes in South China Sea, that's always dominated these discussions. I think Taiwan, I guess, given what was brought up in Beijing in that Trump-Xi summit, was also interesting as well, given the change in, I guess you could say, evolving strategy and commitment around the island. Do you think Taiwan is going to be prominent in terms of discussions there in Singapore this weekend?
Well, let me first, I think there recently has been some very important development. I think right after his visit to China, President Trump made some very important statement on Taiwan issue, actually. I think he, on his flight back and also during his interview with the Fox News, he came very close to explicitly opposing Taiwan independence. And he basically said this, look, forget about sending American troops 10,000 miles across the ocean to fight for Taiwan independence. Just forget about it. And I think this has had a devastating effect on the pro-independence forces and TPP in Taiwan. And in fact, just a few days ago, one of the radical, hardcore pro-independence parties in Taiwan actually publicly announced that it will give up the independence platform and embrace unification with the mainland. So I think here, and also recent polls in Taiwan also shows that public support for peaceful unification has reached a record high of about 23 to 24%. So here comes a critical question. Will the United States, out of geopolitical consideration or narrow interest, such as arms sale or demands from the military industry complex, determined to keep Taiwan separate from the mainland and to block the process of peaceful unification, where the United States stand in the way, even people on both sides of the Taiwan Strait are willing to move in the direction of peaceful unification. So I think this is a tough question that U.S. leaders will have to face squarely in the months and years to come.
Can I ask you too about, Yvonne mentioned Taiwan and Southeast Asia, particularly the South China Sea. The position of China has been very clear. I guess my question is, can we expect new manners of engagement with the stakeholders in that part of the world?
Well, I think Chinese position on Taiwan issue has been very clear, consistent that Taiwan is part of China. And of course, the Taiwan issue, how is to be resolved is really, it depends on the wills of the Chinese people on both sides of the Taiwan Strait. So I think we are willing to, of course, exchange views with concerned parties, partners, friends around the world to help facilitate the peaceful unification process. But the bottom line is this is really an internal affair of China, and it is not an international issue.
Wang Dong, apologies, 我说不清楚. I was asking about the South China Sea and the territorial disputes in that part. We know that the stance of China, to your point, has been clear also on that. But can stakeholders expect a different manner of engagement?
Sure. Well, Chinese position on the South China Sea issue is also has been very consistent over the years. I think we. The land features and the adjacent territorial waters in the South China Sea. Of course, China has sovereignty over it. This is indisputable. But we also stand for peace. We're calling for peace and cooperation on this issue. And we strongly oppose, actually, the Cold War style confrontation, which I think will, instead of bringing peace and prosperity to the region, but rather disruption and confrontation to the region. So I think this is a position that China has been consistently holding over years, and I think China will continue to stick to that position.
Wang, we got to leave it there, but thank you so much, Professor at Peking University School of International Studies, joining us out of Singapore here. And there's more on the Shangri-La Dialogue coming up. We're going to speak with Control Risks partner Angela Mancini, who will join Insight with Haslina Aman to discuss the impact of the Iran war on energy security and global inflation.
All right, welcome back. So the China State Council issued this urban renewal plan, effectively talking about how they're looking to prioritize new real estate development model, improving the housing-related systems here. That's enough of catalyst, as you can see, for really a lot of these penny stocks, if you think about it, when just looking at the price itself, but substantial rally nonetheless here across the property names. Very, very quick note on PopMart. We are up 5%.
Yes, so there's been reports that the CEO appeared at a State Council Information Office press conference showing a twinkle twinkle. So this is, of course, one of their popular IP figures here at the pressure. And that's apparently helping to lift the stock here today. We're up close to 5%. This is Bloomberg. Well, 11:29 a.m. in Tokyo. Japanese markets are going to that lunch break in just a moment. And yeah, it is Happy Friday. I bet it's hot in Tokyo, too.
Let me check. I think we have
I feel
the internet
it feels hot just from that bump shot. It's hot markets, right? We're up close to 2% when it comes to Nikkei 225. Topix is also up 1% or so, 159 levels for dollar yen. But certainly, you know, we are coming into the weekend, counting down the weekend on really good notes here. Good headlines, good tech news.
Good vibes.
Good vibes. Yeah. Let's keep it going, shall we?
Well, let me just do the temperature check. So it's 31 degrees. It's quite hot for this time of the year. It's also fairly humid.
But then you add the humidity factor, and then it feels like 40.
Yeah.
You know.
And Tokyo is so massive that I'd like a place like Hong Kong where you could take a taxi and Uber, and it's not going to cost you your kids' college education. In Tokyo, that's almost a that's a luxury, being able to ferry around in a car. It's mostly a train. Then you have to walk to the train station. Then most of the platforms are above ground. And in the summer, most people are still wearing suits. But anyway, okay, I'm just starting to. It's a beautiful place, though, with really good food. Anyway, oil prices. Why are we talking oil prices here? Yeah, here we go. So we're down to about 93. The statistic for today is we're poised for the worst month on Brent going back to 2020 since the pandemic, the year of the pandemic, and of course the massive gyrations we've seen in that specific year of 2020. Right, now let's talk about Japanese trading house Mitsui. It's looking to invest, and speaking of energy here, in LNG. That's projects across the Middle East, the U.S., and also Oz to really meet rising power demand. Again, ties it back to the energy demands of this AI build-out. Speaking exclusively to Bloomberg, the CEO, Kenichi Hori, also called for an urgent reopening of the Strait of Hormuz.
Yes, we're monitoring the Iran situation very closely, and we have to deliver our products to show the results. So there is certain downside if this situation continues. But at the same time, our customers look to Mitsui for alternative solutions in their supply chain management. The commodity prices may tick up, and that would be an upside that we would try to manage. So it works both ways. Probably net, there's a little bit of a positive compared to our budget, but we have to be very careful. It depends on how long this situation develops.
The direct impact on Mitsui has been also on LNG projects in the Middle East, right? What's going on right now?
Well, the projects, we do have assets in the Middle Eastern countries, and we are watching the situation very closely. We hope for a quick recovery of the situation of these assets. Our immediate impact is not that big, but we're monitoring its effect on the long-term projects that we have in the region.
How do you judge when the right time for resumption of operations would be? What does that look like when, at the moment, we're still seeing whether or not an Iran deal is reached?
Yes, we need to make sure that the safe passage of vessels is resumed, and the Middle Eastern countries are going to continue to be the critical suppliers of energy products to the global markets. So we cannot forecast when that will be resumed, but we just hope that we see an early recovery there.
What will give you confidence?
Safe passage of the vessels and geopolitical stability.
How has the war in Iran and various geopolitical flashpoints around the world in recent years perhaps changed the global energy dynamics when a lot of these issues such as sanctions perhaps are being put on the back burner because the world desperately needs fuel?
The world desperately needs fuel, and the world needs to have more production sites that are reliable and competitive. So this is now an equation of trying to add more sources. And the Middle Eastern sources will continue to be very important. I think it will continue to be critical to the global supply. And with this with the situation in Iran at the moment, the long-term supply-demand situation will tighten. That means that we need to have various projects that are in the works now to be completed, so that the energy industry can continue to meet the rising demand for energy.
Mitsui CEO Kenichi Hori there speaking exclusively to our colleague Sherian in Tokyo. Some other corporate stories that we're tracking for you today. Anthropic has raised $65 billion in its latest funding round, valuing the company at $965 billion and eclipsing OpenAI for the first time. Sources tell Bloomberg that investors included Amazon, Google, Micron, Samsung, and SK Hynix. Anthropic also says it's planning a broad release of new AI models in the coming weeks after developing stronger safeguards for models that earlier deemed too dangerous for the general public. Bloomberg has learned that Apollo and Blackstone are working to bring additional investors into a roughly $36 billion debt financing deal to help Anthropic build out its AI infrastructure. The debt will be used to purchase Google's custom TPUs, which Anthropic would then lease, with Broadcom backstopping payments. It's set to become one of the largest ever private credit deals. And Dell shares soared in light trade after its full-year sales outlook far surpassed analyst estimates, fueled by demand for servers that power AI work. The company sees fiscal year revenue reaching about $167 billion, including $60 billion from AI servers. The COO, Jeff Clark, says the AI opportunity shows no signs of slowing.
Yeah, and I think that after-hours move, massive after-hours move, is really playing out across markets right now. So we're still really quite feeling it. In fact, this is the outperforming group of stocks here in the Asia Pacific. I think we're about to show you that it's coming soon. So, when you look at the server space, and the Lenovo story obviously was in and of its own this week, and of course this gave the Dell rally, and the Dell rally is giving the Lenovo a new lease on life. Check it out, right? 24% today, and what's really been a banner week for Lenovo.
Yeah, and really lifting just, these computing stocks, right? We had an interview BN did with Wiwynn in Taiwan, and the chairwoman there was basically saying, look, the bottlenecks that you're seeing when it comes to AI and the like, it goes beyond even just memory chips at this point, right? So that's why you're seeing this kind of rotation and where, investors are continuing to chase where all those bottlenecks are. Yeah, it's really playing out across more broadly. In the Taiwanese market. Yeah, you can check out that story, by the way, on Wiwynn. There, 666-9 is the ticker there. Okay, let's pivot now, but stay in chips, and let's fold in the EV story here. So the world's biggest EV maker, that's BYD, has now unveiled what it calls China's most advanced chip for self-driving cars. Daniel Lee, our transport reporter, is here with us to talk us through the details of what this unveiling
has taught us, and what can you just unpack what the chip is and the significance of this move here?
Yeah, well, first of all, markets did like what they heard from BYD overnight, although up 3% at the Hong Kong Open, now has given up most of those gains so far. But this is supposed to be China's first automotive-grade chip, 4 nanometers, and so the smaller the size of the chip effect, or the smaller the size of the transistor, gets more chips overall into cars, and so therefore gives more performance, and therefore more performance means more capabilities and faster processing of data, and all of these kind of more smart driving cars that the likes of BYD are rolling out, and so therefore BYD claims it's got something much more powerful, more capable against its peers, and so when these chips compared to where you normally find them in smartphones, the fact that it can be used in EVs is a significant step forward, particularly as EVs are much more challenging in a wide variety of temperatures and conditions overall.
I mean, BYD has always been developing its own chips, but what does this specific chip beat out in terms of the technology out there right now?
So, for example, Huawei, it beats out right now, who's got a 7 nanometer chip, but still there is the market leader like TSMC, which has like a 2 nanometer chip. So I think the key thing is to get these kind of hardware into its cars, but then also the test is for the government, the Chinese government, to approve these bigger range of self-driving cars and testing all on the roads, which is going to still hold back these EV players in the meantime. But for BYD, this announcement does come against the backdrop of this broad slump it has seen in its sales. So it has been suffering, and so this kind of tech really helps it when it comes to unlocking power, performance, style, and the tech that really will attract, hopefully, more buyers to come back to them.
And that takes us nicely to earnings, right? So you have a couple of big names, XPeng, Li Auto. First quarter, not the best?
No. So
what do we expect now? Yeah.
For XPeng, they had a tough quarter on revenue and on operating profit. Both metrics were under pressure, basically. Second quarter, they think that they can get back to its performance in 2025 on sales, but that does seem tough given the backdrop we have seen more broadly in the slowing sales of EVs and the kind of tough market we have seen, and the fact that government subsidies are not there as well. Same goes for Li Auto. Li Auto had a pretty miserable quarter, swinging back to a loss, and so with its sales shrinking, its margins really under pressure as well. They are going to try and refocus and have a better Q2, but analysts also think that they are going to face a tough time. So for Li Auto, having been a real winner, having been profitable for quite some time, is now under significant pressure, and that's part of the broader story here. Who can then tough it out as we see this kind of tough moment for the EV industry again in China?
Danny, thank you. Danny Lee there, our Asia Aviation and Transport reporter. We're checking markets, of course, as we go to this commercial break here, and really continues to be an up-arrow story here for the likes of Taiwan when it comes to the Kospi as well. Han Hai, the chair, is actually speaking at a shareholders meeting, Yong Liu, talking about how they're very optimistic about the second half outlook here. The stock's up some 6% and really lifting the TAIEX here today. This is Bloomberg. Well, pop culture. There you go. Taking center stage this weekend in Hong Kong, with the city hosting its own Comic-Con for the first time. It's one of several big diary entries coming up in the financial hub, which is selling itself as a premier location for mega events in hopes of accelerating a post-COVID recovery, of course, in tourism and retail, dining sectors. I mean, take a look at just all the events coming up, Dave, right? You got concerts, right? I mean, Post Malone, The Weeknd. Got the Cats musical.
Oh, the BTS is next year.
Yeah, BTS. I mean, that's the big one, really. So, yeah.
Can't wait not to be
Take
there.
your pick, right? There's plenty to choose from in terms of
and the airport's extremely busy. You can really get the sense of that.
Is it back? Yes.
Terminal 2, I believe, is open.
Yeah.
I mean, you get a sense of Terminal 2 once you take the train there. Here's data, right? So we've had a look at the data. What you're looking at on your screens, this is out of the tourism department, and what it shows you is on a monthly basis, the blue line is the 5 years before 2019 protests and COVID, and the 3-month average is at about that level already. So in other words, the numbers on visitors is effectively back to normal. To give us more context on what this means, what else the government is doing to further this recovery in the tourism sector. Joining us here on set is the Hong Kong Secretary for Culture, Sports and Tourism, Rosanna Law. Very nice to see you.
Good morning, David.
So we're back?
Yeah, we're back and back big time. Actually, that's what I said last year when doing interviews. And this year, I think more people are telling me that Hong Kong is back. I think it's the facts speaks for themselves, that the things that you just mentioned. And of course, big events like Art Basel, like the Hong Kong International Rugby Sevens, people joining it maybe year after year, or they are new to these events. They all had a good time, and then they see the vibrancy and energy. I think that is important. Numbers sometimes are cold, but the feeling that people get from visiting Hong Kong, I think that is most precious to us.
Yeah, the numbers seem to suggest things are back.
Mm-hmm.
What about spending habits among tourists, especially some of the mainland tourists that come here? What have you seen?
Interestingly, this is not just a Hong Kong phenomenon, but a global phenomenon, I have to say. And that is that the crave for luxurious goods, the handbags, the watches, they're still there. You still see queues in Canton Road, the houses, but really,
the spending, not the suitcases as much.
Yeah, the spending has dropped a bit. And I saw from a Visa card analyst report last year that it is actually an Asian and global phenomenon, maybe because of the economic situation. But I also see another very interesting trend. Our concerts and our IP products, you just mentioned Comic-Con that is ongoing this weekend. A lot of these are actually selling very well, and the products are also selling very well. We have an Egyptian antique exhibition in our Palace Museum right now, and the cat who dresses as a pharaoh is actually very popular, sold out many times, so much so that we're now having it in our MTR stations, merging culture into everyday life.
Oh, okay. So you don't need to go to Cairo. Just go to the MTR station for a flavor of ancient
trip
Egypt.
Going to Cairo eventually, but going to our Palace Museum, you see a good exhibition, and our MTR station, you see the icon.
I want to pick up on one of the trends you mentioned, right? The pattern of the spending habits and the pattern of how long people stay tend to be changing.
Yes.
One of the things I noticed, and correct me if I'm wrong here, is that a big source of tourists, of course, coming across the border from the mainland, is that they're spending less time here, but they're doing higher frequency visits to different places of Hong Kong. In terms of total spend, have you noticed any changes there?
We are still recording 3.2, 3.1 nights for overnight visitors. That has been constant for a couple of years already. We're not doing worse, let's put it this way. I'm an optimist ever. But I think you're right, especially because of the convenience of traveling. They can come more often and then come for a specific purpose, like a concert. They can come several days in a row or several days in every month for a concert or for something that interests them. Last year, we have the Chikawa, for example, Chikawa show in August, scorching heat, but they still want to come because that is attractive to them. And mind you, we're going to have that even bigger in August this year. But I think that is true. And the other thing is, I also look at our hotel occupancy rates. The reflection from operators are that the occupancy rate is good, especially during our festive seasons, usually 90 to 95%, which is not a bad thing, of course, considering the fact that people said we have competition in our nearby cities, maybe their hotel prices are just that bit lower. But I think Hong Kong is still worth coming to, and people are doing that continuously. Our effort as government is to make sure that we have enough attractive things for them to do. I always mention this concept of FOMO, fear of missing out, that you have to come right here, right now, for this particular purpose. Otherwise, you miss it. That means you can be a repeat visitor. You can actually be very familiar with Hong Kong, it may not be on the top of your agenda if not for that big event. So what we're doing right now is this kind of thing. The other thing we are doing is to create a regular pattern for some of the people, like Art Basel. We clinch a 5-year deal with them so that Hong Kong will continue to be the only exhibition area or venue for this part.
What about when it comes to airlines and flights? I mean, I think maintaining, expanding flights is probably crucial to attracting more and diverse tourists to Hong Kong. Is this something that your team is working on?
We are working on with our Transport and Logistics Bureau and the Airport Authority, of course, and our home carrier, Cathay Pacific. What I know is that with the third one-way commissioned and also the second terminal commissioned, the capacity of Hong Kong will continue to grow, reaching our original standard and maybe surpassing it. Right now, of course, we have issues in the Middle East, so some of the flights might not be as frequent as we would like, but also that kind of create a side effect, and that is that I just came back from Europe, and a lot of the European visitors will now come directly, if they could, instead of taking a stop somewhere. I think that also gives us a reason to work on our flight schedule as well.
You mentioned the Middle East and the disruptions there. The government target for visitors is, correct me, is it 54 million?
53.8 million this year.
To be exact. Are we on track still for that?
We are still on track. Actually, we are exceeding that track a little bit.
At the current level? Okay.
At the current level, we have, I think, a 12% increase, 10 to 12% increase over same time last year. Sure. We will issue the May figures, I think, in 1 or 2 weeks' time.
Okay.
I am optimistic about that because we have the Labor Day Golden Week, and that week, even with a little bit of a wet weather, we are performing quite nicely. We will have to look into the next quarter very carefully because apart from the uncertainty in the Middle East, this is the World Cup finals year we're talking about. Yeah. So traditionally, a lot of people will stay home or go to where the
World Cup is.
Yeah. And maybe not this part of the world. But right after that, in late July, early August, in Hong Kong, we're going to offer a range of choices. I mentioned the Chiikawa show just now. We're going to also have a football festival.
Yes.
We have 6 big international teams coming to Hong Kong, and a lot of people are already very excited about that. And then it enters into the second half of the year, which is our peak season for tourism arrival, both from the mainland and internationally.
Do you need, or are you planning any fresh sort of incentives to get more tourists to spend here, whether it's rebates, cash coupons, anything?
Reducing the tax on the hotels?
Or even, can you tell us a bit more what you guys are working on?
Well, economically speaking, the hotel occupancy rates actually rose after we introduced the
tax?
The tax.
Okay. So probably not because of that, but
probably not because of that. It's two phenomena I'm quoting, just that. But honestly, I think Hong Kong never competes on price. We compete on quality. We compete on what we can offer that is unique. As the Hong Kong Tourism Board's latest promotional tagline, only in Hong Kong. What's only in Hong Kong? So we're going to have new light shows in our prominent tourist attractions like the Peak, like Victoria Harbour. We're also going to have even bigger and nicer version of the Wine and Dine Festival. I just came back from Bordeaux, and they were so pleased with what happened last year that they promised they will bring even better winery and products to Hong Kong this year. And then we will enter into, of course, our New Year countdown. Last year's New Year countdown was in a smaller scale. This year, I think we're going to revive the whole Hong Kong glamour. Over
you speak of glamour, you speak of wine. I'm wondering, there's a lot of interesting kind of stories you hear about wealthy people coming to the city to buy yachts, to buy gold, to buy country club memberships and the like. Are there efforts being done from your end to attract more wealthy people as we see Hong Kong emerge as a bigger offshore wealth hub?
Yes. You mentioned yacht tourism or yacht development is, of course, a priority of the government. We're going to have new berthing spaces in the airport, in Aberdeen, in Lamma Island, and probably somewhere else. So a lot of these are happening. We also have set aside money for attracting high-end commercial shows or customer shows to Hong Kong, targeting this group of people. One thing that you shouldn't miss is our horse racing tourism, because Hong Kong is really world-class in this sense. And our group one event always attract a lot of high-end visitors. It's just that these people, they wouldn't want us to publicize that certain who and who is coming. They want their privacy, maybe even for security reasons.
Rosanna, it's great to have you.
Thank you so
Rosanna
much.
Law, Hong Kong Secretary for Culture, Sports, and Tourism. Always great to end the show on really how to bring
have more parking
culture
spaces
to
for
our
how
lives.
many yachts do you guys have? Like five or six? Don't listen to David.
No.
Before we wrap up the show, Hang Seng Index 0.4%. So we'll see you all on Monday. Of course, for everyone in Hong Kong, stay inside, keep cool. It's an extremely hot day out there. Stay healthy, hug the loved ones, and we'll see you all next week. Happy weekend.